This week on 31st of May, we have 3 Power Pack webinars waiting for you. At 10 a.m., we have Know Your Insurance, Hidden Clause and Terms in Health Insurance. And at 11 a.m., we have a deep dive into the SIP calculator. Simultaneously at 11 a.m., Plan, Pause and Pivot. Financial planning for non-linear life. Click on the registration link in the description to join the webinars to make your weekend a learning weekend.
If you've been tracking gold prices, then it's been a bit of an up and down journey in 2025. And one thing that you might have noticed is that gold tends to perform when markets are going down. So why does this happen? Why are investors more interested in gold when equity markets are weak? Now, we are going to look at 3 important reasons as to why this occurs over time and why gold can be a good diversifier for any equity investor. So first is gold is a safe haven asset. This essentially means that when things aren't looking too good, gold has always been the kind of asset that you can fall back on. This is a time-tested method, especially in the Indian mentality. And if we look at some statistics as to how India invests in gold, you'll be quite shocked. So Indian households actually own 25,000 tons of gold. And if you want to take a guess at how much the RBI owns, it's less than 1,000 tons. It's actually even less than 900 tons of gold. So households have really stored and focused on owning gold as an asset because it's tided you through all sorts of crisis periods and is a universally accepted currency. Interestingly, Indian women also own almost 11% of the world's gold reserves. So just think about that. Culturally and historically, we have always placed a high importance level on gold as an asset and a wealth protector. The second important point is that gold is a low correlation asset. This means that when you compare how gold moves with how equities move or fixed income move or even global equities move, then you notice that they don't move in the same direction. This essentially means that if other things are not going so well, gold is likely to outperform. So when we think about the correlation between gold and domestic equities, it's mildly negative. This means they tend to move in the opposite directions. If we think about how gold is placed against fixed income, then there's a low positive correlation. And this is also true of gold with global equities. So this data has come in from Bandhan Mutual Fund and you can take a look at the correlation stats between gold as well as the other asset classes. Gold is also considered to be a store of value. This means that gold can retain its purchasing power. So imagine during COVID, you slipped 500 rupees under your mattress and a gram of gold. Now fast forward 5 years down the line to today and gold still retains its same purchasing value, but your 500 rupees is actually depreciated. So what you could have bought in 2020 for 500 rupees is more than what you can buy today with the same amount of money. So from a value storing perspective, gold makes a lot of sense to own. This is partly because gold cannot be manufactured or produced or created in excess. There is only a limited quantity of gold on the planet and that's all we have to live with. Whereas in today's modern financial system, governments can easily print more cash. You're also in an economy that's constantly inflating. So the value of money keeps decreasing over time. So when we address these issues, you realize that gold is a great asset to own in your portfolio. And that's a wrap for the 3 reasons why gold is moving up when markets are moving down. So first of all, it's a safe haven. Second of all, it's a low correlation asset. And thirdly, it's a store of value. Whether you should own gold or not is something you need to discuss with a professional, because when you buy gold and where the cycle is matters a lot in terms of what you can expect the asset to do for you. So we wish you a very fruitful investing journey. And if you have any questions about what we do for investors, get in touch with us.